Hi, this is James Shug with Westpac London's end of day report for Tuesday the 19th of June. Well, it's a very positive day actually on equity markets today. The main driver of that has been increasing hopes or expectations that the Fed will put in place more stimulus when they announce the decision of their FOMC meeting, which concludes tomorrow, Wednesday. It's a two-day meeting. There'll be an announcement of their decision and a statement, and then a bit later the Fed officials release their central tendency forecasts, which were last issued back in April, and then Bernanke will give a press conference. I don't think the market's looking for another round of quantitative easing at this stage, but certainly there is an expectation that there will be either an extension to Operation Twist, where the Fed has been buying long-term securities and selling shorter securities into the market to lengthen the duration of its balance sheet. Or there'll be some hint in the commentary or in something that Bernanke says that suggests another round, perhaps even of balance sheet expansion, genuine quantitative easing, might be not too far down the track. We don't think the data yet is quite weak enough for the Fed to go down that path or to feel comfortable doing it. Although we think the case is certainly strong enough for them to embark on further easing, and indeed we do expect another round of QE to be announced at some point in the third quarter. That'll be at the August or September FOMC meetings. Anyway, that's the thinking that's going on, and it's the main factor behind the strong performance of equity markets today. But there are other stories today. G20 is wrapping up. We'll get the usual statement saying that the authorities will do all they can to promote growth and so on. But usually, as long as you've got low expectations going into a G20 meeting, you're usually not disappointed at the outcome. In Greece, looks like government's pretty much been formed. Not quite there yet. The Greeks are going to push for a renegotiation of their bailout. As I think they should. It's the conditions of the current bailout are driving that economy into the ground. We're looking at another 7% contraction in GDP this year for Greece. The bailout is just it's counterproductive, and everyone recognises that. That's why the election vote went the way it did in the first election, and I think the only person that is choosing to ignore that is Angela Merkel, who today said that there would be no leeway towards Greece in terms of any bailout renegotiation. So watch this space on that one. In Spain, the government there successfully issued some shorter-term debt, 12-month and 18-month debt. However, compared to just 4 weeks ago, they paid something like 2 percentage points more for that money. So it was 3%-ish back in May. Middle of June today, they paid just over 5% for the same term. So that's an indication of the extent to which markets have become more concerned that the Spanish government simply is getting close to the point where it can't continue to finance itself. That said, Spanish 10-year bond yields are just below 7% today. Having been as high as 7.28, I think it was, at the start of this week. In Germany, the ZEW analyst survey posted its biggest one-month fall this century. Last time it fell, let's see, about 27 points, which is what it fell in June, was back in 1998, before the euro even existed. And also that's the outlook index, the current index also fell quite sharply. So it looks like German analysts are really picking up on the impact that the austerity in the other parts of Europe is having even on the German economy, which until recently looked to be the engine room driving the rest of Europe. So in the UK, we had a softer than expected inflation. For the first time since 2009, UK inflation at 2.8% is less than 1% above the 2% target. And that might give the Bank of England a bit more scope to embark on another round of quantitative easing before too long. In the US, housing starts, they fell 5% in May. Well, that was driven by the volatile multiples component. Single-family housing starts actually posted their third consecutive rise in a row in May. Those three gains reversed the falls we saw in January and February in the single-family component. But look, these numbers are all still at very low levels. So although the percentage changes are positive, the level of housing starts are still something like 60% down on the peak we saw back in 2006. I mean, the housing is still very weak in the US. So those are the main news stories today. In terms of markets, at the London close, we've got the FTSE up 1.7%. There were some decent earnings reports today in London too. The French market up 1.7%, the Germans up 1.8%, the Spanish rose 2.7% today, and the Italians had a 3 1/3% gain. And the Dow at the moment is up about 1% at 12,867. Commodity markets mostly stronger. We've got copper prices up 1.2%, oil's up 1% exactly, $84.12 a barrel, but gold's down 0.2% at $1,624 an ounce. The Aussie dollar's done pretty well. It's at 1.02 against the US dollar, so it's gained about a cent in today's in today's more risk-friendly environment. Couldn't think of the word there. Okay, that's about it really. We've got a few figures out in Australia tonight. The leading index is one, construction work done, or housing starts is another report to watch out for. The big news tomorrow will be what the Fed does, and we'll be back with more tomorrow to talk about that. Okay, thank you, bye-bye.